Chris Liddell, the chief financial officer. He came from Microsoft. So some changes over at General Motors. Adam Connors is joining us, the director of corporate finance at CK Cooper in Irvine, California, starting his New Year's Eve very early. Adam, nice to have you.
Nice to see you, Jenna.
What do you make of these changes at General Motors? Are they the right changes?
Yeah, actually, I'm not opposed to them by any means. I mean, we're looking for something here. And so to have someone that's going to interface with the government who is, as you said, the largest investor at this point, and they might have a different slant and they're not the good old boys of the auto industry, then so be it. I mean, at this point, really, Jenna, I'd like to see some type of different change or some type of different approach. So I'm not opposed to it by any means.
And so going into the new year, we still have obviously heavy government involvement in this company. We're going to get to that story on GMAC in just a moment. What would you like to see from General Motors in the new year?
I would like to see some type of, and I hate to use the word, but restructuring, reshuffling. I'd like to see new ideas and new things moving forward. Those are some of the things that they're going to have to do because, quite frankly, we were, back in November of 2008, we were trying to see, we were thinking we were going to be able to help them out and all these different bailouts and things were going to change things for them. And here we are 13 months later, and I'm not too impressed, and I'd say the general public as a whole is not impressed either.
Are you in the market for a car?
I'm not, actually.
And that could be...
I drive my clunker for as long as I can.
All right. Well, you know what? If it still works and still runs and gets you to the studio, that's what's important. Adam, thank you very much. Adam, we're going to talk more about the year ahead coming up. Adam Connors for us out in California, CK Cooper. Let some employees skate through the new year, and we see some layoffs sometimes increase in January. Adam Connors is back with us. He's the director of corporate finance at CK Cooper in Irvine, California. So, Adam, as we heard, the Labor Department says this is an overall trend that's improving. What do you see for the labor market in the new year?
What I see is that, maybe we'll drop below double digits, maybe we'll increase to 11%. In the new year, I see things being relatively flat. I mean, there'll be some misnomers and things of that effect with the numbers, but I generally, and I think overall, as most folks expect, pending any type of double dip, that we'll see unemployment stay right around the same level and trending hopefully downward as we head into the latter part of 2010. So
if that is what your forecast is, then how are you viewing stocks, companies that are exposed to the consumer right now?
Sure. I personally think that stocks have actually gotten a little bit ahead of themselves as of right now with the current valuations that they're at. And so I predict, especially within the first half of 2010, that we'll have a significant amount of volatility within the markets.
What's that volatility going to look like, Adam? Because we've heard the word volatile, and coming out of 2009, I think all of us feel intimately aware of what volatility is really like. What is volatility in 2010? What do you mean? What is that going to look like?
Sure, there's going to be wide swings within the markets across the sector, and it's not going to be any particular sector weighted. It's going to be just overall herd mentality, if you will, whether it's the talks of the double dip, and then just like how you're mentioning today about oil, perhaps if it gets cut in half or then doubling, that's a tribute to a potential recession on the midst. And so that's one of the things that folks are going to be looking at and can potentially make trades on, and therefore depress valuations or increase valuations depending on any type of significant unemployment job claim or something to that effect.
All right, Adam, get ready. We want some of your forecasts for the new year and also some of your reflections from 2009. We'll be back to Adam in just a few moments. In the meantime, traders are gearing up for the final trading day of 2009. It certainly has been an interesting year, to say the least. Adam Connors is back with us, Director of Corporate Finance at CK Cooper out there in Irvine, California. Adam, just go ahead, sum up the year for us. I mean, what's your take on 2009?
2009 was definitely for the record books. I mean, we saw pretty much absolutely everything. I mean, everything from Bernie Madoff to the complete throwing out of fundamentals in the market to trying to analyze any type of subjectivity of how regulation and everything is going to come into play. And so hopefully 2009 is going to be stay in the record books, and 2010 is going to get back to some more fundamentals that we can adequately, as investors, try to make conclusive and logical decisions.
That's a nice resolution, but you just told us earlier that you think the market's really not going to have a whole lot of rationale as far as the volatility that you expect to have happen. So, as someone that's preparing for that, what are you doing?
Sure. What I'm doing is basically we're trying to incorporate mechanisms to be able to anticipate things. I mean, what I am looking forward towards is less of the subjectivity involved with analyzing the way that some approaches, such as bailouts and things to that effect, would have to play, and more in line with going back to the fundamentals of actual companies and looking at their financials and things to that effect to really try to decide, who's going to be able to come out the best at the end of this.
Well, let me get your take on something. We kind of separated the top 5 performers for the Dow this year, and also the bottom 5 performers. This is not the chart that we want to look at. What we want to look at is the top 5 stock performers. American Express, Microsoft, Intel, I'm sorry, not Intel, IBM, Cisco Systems, and Hewlett-Packard. Those are the top 5 Dow performers. Just what's your reaction to hearing that those ones were the ones that actually finished out what you could say on top?
Yeah, sure. It doesn't surprise me. I mean, those are the companies that still, fundamentally, they have their act together. And so, obviously,
even
you would
American
think that
Express?
those would be the ones. Sure, absolutely.
Yeah.
American Express has one of the more conservative approaches when it comes to their lending standards and the way that they do things, as well as I think anyone that has, I'm an American Express member, and even down to the consumer level, people enjoy the services once they're a part of them, and feel as though American Express is going to be a fundamental player moving forward.
So do you see those 5 performers also being, could potentially be, excuse me, top 5 performers next year as well?
I think so, yeah, absolutely. I mean, people are going to be, as you know, people are trying to find places to put their money, and they're trying to find safe places. And so, yes, there's all this turmoil, and there's all these things that are going around us. However, as they've seen, investors don't want to miss out on the potential gains that they've experienced with those top 5 gainers. And those are some of the folks, the cream of the crop, if you will, that people have some type of comfort that hopefully they're going to be around next month.
Well,
so.
it's interesting that you mentioned kind of the safe havens or safer plays, recessionary plays almost. Some of the names that come up when you think about that are names like Procter & Gamble, like Walmart. But if you look at the bottom 5 performers for the Dow, they're among the names there. ExxonMobil, General Electric, Walmart, Verizon, and Procter & Gamble.
Sure.
What do you make of that?
Yeah, basically with those, the reason that comes in is that it's more consumer driven. And so I think that folks, we have the uncertainties with the unemployment, and we have some of the uncertainties of what's going to happen from the consumer side, which makes up 70% of our GDP. Folks are going to basically in the near term and in the short term would probably want to sell off on those and go into more folks that are going to be able to take advantage of any type of upturn in the economy, which would be the tech sectors and some of the other folks that are going to be able to be the first calls for some of the businesses that are looking to update some of their antiquated infrastructure.
Adam, quick thought here on the commodity market. Does it still have room to run after we've seen the price of oil double in the past year? You've seen gold hit new record highs. Are you looking at that sector seriously in 2010?
I'm a little nervous of it, Jenna. I mean, I think there might be some heat in there, especially on the gold side. I mean, oil's a little fickle because back in July of 2008, we hit a peak of 147, which followed only 5 months later to that trough, which is in that 34, 35, 36 range. I can't exactly recall. And so to be doubling that, which is the trough, which in my opinion would be the opposite side of a seesaw, a market overreaction to the price of oil. I personally think that I wouldn't look too heavily at the potential of a double dip just based on that matrice alone. All
right, Adam, appreciate it very much. I know you'll be joining my partner, Adam Shapiro, here in just a moment. It's going to be a show of 2 Adams. Nothing better than that. Adam, Happy New Year to you again, and I'll talk to you in the new year. Adam Connor for us, and Adam Shapiro. Join us. Very easy. That's very nice.
Double A.
Very easy transition. Happy New Year's.
Thank you. Happy New Year.